Hey, I'm Shaye Warner, and you are listening to the Casual Cattle Conversations podcast. Whether you are a seasoned rancher or just curious about the cattle world, this podcast dives into the stories, science, and strategies shaping the future of ranching. Let's get started and keep your herd ahead of the herd. Today, we are visiting with Hannah Mann about tax and bookwork tips for ranchers. This is a super practical episode because Hannah exclusively serves ag clients as a CPA and also has boots on the ground experience, which makes her an excellent resource for this topic. This episode is brought to you by Ambrook, so be sure to check out the link in the show notes after you listen so that you can learn how you can be more confident about your farm and ranch bookwork and numbers throughout the whole year. But with that, let's visit with Hannah. Hannah, it is a pleasure to be speaking with you about tax tips for ranchers today and also just bookkeeping tips in general. So thanks for joining me.
Yeah, absolutely. Thanks for the opportunity.
Okay, so help those listening get to know you by sharing why you are passionate about the beef industry or maybe just the ag industry in general, because I know you serve a lot of ag.
Yeah. Almost exclusively ag at this point. So I was born and raised northeastern Colorado, still live there today. My husband's fourth generation rancher. We're raising the fifth generation of ranchers. My 8-year-old has already started his own herd. So I think that I'm most passionate about ag mainly because I share very similar values with the ag community, right? I understand the family dynamics because I'm in one. And I think that it really translates well when you're working with operators within their operation to, never have the confusion. What's a steer? What's a heifer? You know what I mean? I think that the ag community overall, they're just great, good, hardworking people. You know what I mean? I just really resonate with them. And I think it's because I can speak their language. You know what I mean? I also just have such a passion for ag because ag has so many like crazy good tax benefits that the rest of us can't take, right? Like we can on our ag operation side, but as far as like my CPA firm, I can't do the prepaying, the income averaging, like all the things that they can really take advantage of to really control their effective tax rates and their marginal tax rates. And so I just think that there's just so much opportunity to truly help the rancher and keep that working capital in their operation. Like that's my biggest thing is building equity for them, right? Like not just, overall tax strategy, in my opinion, is a multi-year thing, but it's also like a continual thing, right? Like I have clients where we do the tax strategy, but then we extend their tax return and then we can make decisions on the prior year return that impacts the current year return because by that point we kind of already know how calves sold, how we marketed grain, things like that. And so there's just so much we can do to really be proactive on the tax front. And so I think that's really where the passion comes from. Before I started my own firm, I worked for a couple of other firms and it just until I really like started building my own client roster, like a switch flipped. When it was people that I had, their family history, their name, their face, I knew about their operation, I knew about their kids, right? Like that was such a big game changer. When you just work for another accounting firm and you're just like essentially data entry, you're just tying out QuickBooks, dumping it in tax software, like that work can get really onerous and repetitive. And so it was like so apparent to me. My final tax season working at that other firm, I had 7 clients when I went out on my own. And like when one of those 7 would call my personal phone because I didn't have a business then, right? So they got a hold of me. Like one of them, their sister ran into me at Walmart and it was like an old high school friend. And she's like, "What are you doing here?" And I was like, "I work here. I'm a CPA." And she's like, "My brother needs a CPA, right? And I need a CPA and my dad needs a CPA." And so I like gave her my number in Walmart. And what's funny is like ever since then, I know that the referral came from them if it's my personal phone. Like if a, unknown number is calling and like wanting tax help. Anyway, all that to say, like once my own clients who I had built the relationships, like those projects I couldn't wait to get started on, where like the stuff where it was just a number, right? Like it was so different and I had no control, right? It wasn't a tax strategy at that point. It was just data entry. Like it wasn't what we could do in the future. How could this be better? Like it was just basically numbers in, numbers out. Here's what happened. You know what I mean? Just very surface level. So I think that's what I love most about the ag community. It also helps. My husband is in ag banking, and so we often kind of riff on each other's industries. You know, not always the accountant and the banker get along and agree on financials, right? Like tax, we're all about cost accounting, right? Where bankers are all about like fair market value. And so there's like a very delicate balance between, you don't want to have a bunch of unearned net worth change, right? Because that's essentially someone saying, oh, now your land is worth more. You could have lost a ton of money in your operation. And I think that's one of like the next steps in Ambrook, like leveling up agriculture financials is like really breaking down the enterprises, right? You could have a trucking operation that's actually carrying your cow calf operation. And if all of your income is just dumped into one platform, like total income, total expenses, like it would be impossible to say, okay, what's making money, especially ag being not on a calendar year, right? Oftentimes you have operators that haven't sold the crop they just harvested, yet we're prepaying for the next crop. So when you just look at like a Schedule F and a tax return, which bankers use too, right? They call them spreading the tax return. That always isn't an indicator of did they make money? Did they not, right?
Well, first of all, what a reason to be passionate about the ag industry, and you are offering a great service for your clients. And secondly, thank you for already kind of leading into some of what we're going to talk about today. I mean, you brought up Ambrook. We're going to get into that later in the conversation. But before we do that, I'm curious if you can kind of highlight maybe some of those common mistakes. And maybe mistakes isn't the proper word if producers just aren't aware of what options are out there when it comes to end of year bookwork and preparing for tax season. So would you mind, picking one for now and talking about that?
Just picking like some overall like tactical strategies to help them kind of no matter what they choose.
Well, I know previously when we chatted, Hannah, you've talked about, so for example, like making sure the accountant has a full breakdown of loans, reviewing depreciation schedules. We've talked about effective tax rate versus marginal tax rate. I know you're passionate about understanding Schedule F versus Schedule J, if I'm correct. So maybe let's dive into some of that.
Yeah, I mean, these are good tactical strategies no matter the size of your operation, right? Like when you're dealing with accounting and ag accounting, you see a gamut of the people that prepare those, right? You will have like shops that are more old school where the farmer rancher just mails their bank statements. This is crazy to me. They mail their bank statements to the accountant. The accountant has staff, right? That they pay, $20 an hour and then they charge the client 3 to 4x to prep that. And so it's all good and well, but I think that can kind of be conducive to the farmer or rancher kind of putting the head in the sand as far as like their financials, right? And it's also doesn't really let them have a sense of like what's working, what's not. But it also, there's some details that can get lost, right? Like, so hypothetically, let's say someone goes out and buys a tractor and instead of running it through their bank, they just get to Ag Direct, right? It's a loan. They won't make their first payment for a whole nother year. So then we get to tax prep. And it's often clients come to my office just because they're frustrated with their prior accountant and they're like, I told them I bought a tractor. And I'm like, well, give them the benefit of the doubt. This is not on your financial records, right? You haven't made a payment yet. You bought a tractor. The journal entries weren't made, debit equipment, which is, assets go up with debits, down with credits, which a lot of people like, I don't expect clients to ever know that, right? But when I do like have this conversation, like no one put the asset on the books and no one put the liability on the books. So the books don't know that this tractor ever existed. You know what I mean? So I think a huge thing with helping anyone prep for tax season is as they get those purchase orders throughout the year, either send them to the accountant, upload them to the portal, just keep them in a tax file. With my clients, I recommend a folder system, right? So as their tax documents come, they just put them in a folder and then upload them at one time or drop them by our office. We have a physical location, and so sometimes that's helpful for them to just drop off their packet. We have a quick little questionnaire in there for them, a checklist of here's all the source docs you brought us last year. We're going to need these this year, or a reason why they're not in there. Anyway, so that'd be a good time to just start that next year's folder and put all the purchase orders in there, right? We also talked about loan balances, right? When you're tying out your balance sheet, putting in there the loan balances at year end. Oftentimes people make payments, but they're missing the interest expense. They're just taking it against a loan on their books when they could be missing out on, tens of thousands, hundreds of thousands of interest deduction that aren't on their books. And so I think really making sure all interest is accounted for, whether it's with your bank, AgDirect. I have a couple clients that got SBA loans, and they don't send those out in the mail, those interest forms. You have to log into your portal and print it. So unless you're really deep diving with clients, let's tie out this balance sheet. Tell me about every single loan you have. It's a lot of work, but in the long run, the juice is so worth the squeeze. So we talked about that, all interest balances, and then my favorite thing is effective tax rate and marginal tax rate, right? Just because you get clients that don't understand their effective tax rate, which your effective tax rate is essentially the average tax you're paying on every dollar, where marginal tax rate is for every extra dollar you take in, what will that be taxed at, right? So people could have a 22% marginal tax rate, but their effective is only 14%. And so I think that's the biggest thing people don't understand. One is their effective tax rate, which factors into something that's factored into it is qualified business income deduction. This came out in the Tax Cut and Jobs Act. It just was extended again with the OBBBA, OBA, whatever we want to call it. And so it's essentially a 20% tax deduction for taking in income. And there's certain thresholds, right? You cross 400, 450, this is inflation adjusted. So depending on when they're listening to that threshold will change. But up to that amount, as long as they're not a specified service business, so accountants, unfortunately. But farmers and ranchers definitely aren't a specified service business. They get a 20% tax deduction just for taking in income. And that can be really profound. That's essentially buying something that you didn't buy, right? You have $100,000 of taxable income. You get a $20,000 deduction. That's incredible. And so I think now is a great time. And this OB3A that came out, we also kept tax rates lower, right? They were expected to go up. We kept them low. And so I think when people understand their effective tax rate and how it breaks down, I think they're not so fast to think, oh, I need to prepay so much. Oh, I need to go buy more green or red paint. You know what I mean? I really hate to see when people try and buy their way out of tax, just because it really hurts them on the working capital perspective, but also on the equity perspective, right? And it's kind of a vicious cycle, right? You buy equipment thinking you're outrunning tax, or you have this mindset that your goal is to pay zero tax. And that actually really hurts your operation. When a lot of times these clients, we get them in the door, they think they have these huge prepaids they want to make before year end, or, some just keep the cold cow check on the fridge till after year end, whatever. And then we can really get down into it and say, okay, this is your effective tax rate. And you hinted at Schedule J. So Schedule J is the form we use to income average. And so essentially you income average on the prior 3 tax returns. So let's say we have low years, we have a high year, we can fill up those prior year tax brackets, which is so cool. We can't do that as accountants, right? No other industry can do that. And so you have to be careful what counts as farm income. But selling coal cows, selling commodities, you know what I mean? Most of the time it counts. There's, your accountant will sift through what does and what doesn't. All that to be said, there's often times where we could take in a big coal cow check or sold equipment or, whatever's in the rotation and income average back, and we're effectively paying like 7% on that money, and you took in, 300,000, 200,000, like you'd be surprised how much we can income average back and they're like, so you mean I don't have to cut that check and ratchet up my line of credit? And I'm like, at the end of the day, this is your decision, but writing off this 100,000 saves you $7,000 in tax. To me, that's not a good deal. You know what I mean? And so, yeah, I just think it's like people just really have to work with their accountant, know their effective tax rate, know their marginal tax rate, have honest conversations like, where am I comfortable paying tax? You know what I mean? A lot of clients, when I ask them, where's your tax palette? What are you comfortable with? I have some that think 24% is the greatest win, right? I have others that are like, I think 12's good, right? The government gets 12 cents, I get to keep 88 cents, like working in my operation. That seems reasonable. You know what I mean? And also with that income averaging, we can structure it on a multi-year level where instead of paying ordinary income and self-employment tax, which is essentially like 15-ish% on top of your ordinary income rates, we just choose to, kind of level out that Schedule F, keep it at zero, keep it at 400 bucks, if we really want to play it close. And then we'll have 47.97, so selling coal cows, selling things like that. So that can be the income that we take in and we just kind of defer a bit. But then in that fourth year, we just spike the self-employment income and take a big Schedule F. Then you're filling up that Social Security Medicare cap once instead of paying like 15% on 100,000, 100,000, 100,000, and then, whatever it is at that year, because again, inflation adjusted, they just came out with the 2026 ones. So there's just so many strategies to use that I think are underutilized, and the IRS themselves has said that Schedule J is underutilized, but IRS isn't going to send you a letter saying, hey, you could have income averaged, try again. We put a Schedule J in there for you, so, now you're getting this check back. And honestly, not a lot of tax softwares are good at catching it. I use UltraTax in my firm, and I chose UltraTax. It's more of a top shelf product, right? You have like CCH, Lacert, UltraTax. I just went to an ag conference in Denver. I'm part of this Ag Mentors LLC group. And a lot of us use UltraTax, but a lot didn't. And what I thought was incredible is like UltraTax gives diagnostics, right? It'll pop up in the tax software and say, hey, you put that this person's a farmer, a rancher, Schedule J, fill this prior year info out, and you could save them some real money. And so I was surprised at what softwares don't use that, but I also, to be quite frank with you, I was surprised how many firms are offshoring work, to other countries where they probably don't have the same views on agriculture that we have, and there might be some things lost in translation, right? Like when we're shipping work off to Philippines, to India, to things like that, I think I think it'd be very difficult to make sure that we were catching things that are pretty elaborate concepts within our tax code.
Well, there was there was a lot there, and I appreciate it because, well, I think, in the subject itself, it can be, there's a lot to talk about, especially from your perspective where you're saying there's a lot of underutilized tools. So we could spend a lot of time discussing those, but also understand that it's very situational for each individual, each ranch, their goals, what they're okay with, how much tax are they comfortable paying, etc.
Yeah, and that's just it, is like every operation is unique, right? You have some operations where they're deferring calves, instead of selling calves when they could get 600 to 800 bucks, they kept them and they ran them longer and they, found some grass. And so now essentially they have two calf crops coming into one year. Like it's just really important to keep a good pulse on the multi-year strategy, right? When we're talking, okay, I have some operators that they intentionally cull all cows at a certain age. And so keeping that on the radar and kind of keeping track of, okay, what are the age of these mama cows? You know what I mean? Like, do we have a big 4797, or if they bought the cows, do we have ordinary income recapture we got to consider? And so I just think it's so important. I mean, every operation is different, and judging by the conversations you have with operators, like they all do it different. And so, often you get clients that are like, my neighbor sold ground and they didn't pay any tax. I want to do that. And I'm like, well, you don't know the actual intricacies, right? Like, did the person before them own it outright and it got a stepped up basis? Like, unpack some of that, right? Did that other person have a huge capital loss carryover? Like, there are so many things that like could have been, that just because it works for one person doesn't mean it works for all of them. And back to our like prior conversations, we touched a little bit on like IRA deductions versus Roth IRA deductions. And so that's another scenario where it is very individualized, right? Like depending on people's tax palette, I don't always say like a traditional IRA is the way to go, right? If you get someone that's like effectively paying 7% tax, they'd be so much further ahead to sock that into a Roth, which is essentially paying the taxes now and letting it grow tax free. You know what I mean? Some people just automatically have this misnomer that, like, oh, I just need to put it in a traditional so I can deduct it. And it's like, that isn't always the case. Again, there have been situations where you have people on the marketplace for their health insurance, and that's based on taxable income. So we'll get to year end and uh-oh, they went over a little bit. Well, we can sock some money into an IRA to lower that taxable income, and you would be mind blown how much money that ends up saving on taxes, because they're instead of putting that money, sending it back to the government to pay for prior year health insurance, now it's socked into an IRA. And we can always do things later, convert it to a Roth, whatever their goals are, right? And how close they are to retirement.
So on the topic of, you kind of touched on IRA versus Roth IRA. What about 401ks as an investment option for farmers and ranchers?
They're okay. The thing, I mean, about a lot of these, let me back up. You might cut that. With a lot of the retirements, they have their own rules of when they can take them, when they can't, can they loan against them, can they not? And so there's a lot of rules to be careful for there. Also, like one great thing about a lot of retirement accounts is that should someone ever go into bankruptcy, like that's not an asset that they could have to fork over. So, a lot of ag operators are land rich, cash poor, you know what I mean? And so I think just like a small nest egg, they like knowing that, hey, if this really heads south, I've socked a lot of money into an asset that no one can touch. So, I think it all depends on their tax palette, right? You get a solo, it's based on net income on a Schedule F. Well, when you have positive net income on a Schedule F, you're subject to self-employment tax on that. So, even if let's say you have a net Schedule F of $100,000 and you want to sock away $25,000, you're still going to be paying Social Security and Medicare tax on that $100,000. You know what I mean? So I think a lot of times people just don't know the implications. Like, granted, they might be saving 12% by deducting that solo, which is an above the line deduction, and so it comes off of taxable income, but it doesn't chip away at that self-employment tax. And so a lot of times they think, but I put away 25,000. Are you saying that I now have to like still pay Social Security and Medicare tax on that? And it's true. So I just think, I love when clients like bring this stuff to the table, right? They're like, hey, I was listening to Mark Kohler, right? And he recommended this. What do you think? Or, I was listening to Dave Ramsey and I heard I could do this. What do you think? Right? And it's like, let's see how it applies to your situation and decide if that's really the best case. You know what I mean? And you've also got to be careful with some traditional IRAs and Roth IRAs. Like, they have income thresholds on the lower end and the upper end, right? Like, you have to have enough earned income. They can also be a phenomenal strategy if you have either a sole proprietor, so they just have a Schedule F or a Schedule C. We're talking farmers ranchers today, so Schedule F, Or they have a partnership where the husband and wife are the only two partners. They can pay children under 18 up to the standard deduction amount, so depending on when the listeners are listening, 14, 15, $16,000, check with your CPA. But that comes off of your Schedule F. Totally. You write off that $15,000. The child has a high enough standard deduction, they're not paying ordinary income tax on that. And because they're your child under 18, they're not paying Social Security and Medicare tax on that wage either. So you funnel them $15,000, you invest their maximum, because that's earned income. You invest the maximum they can into a Roth IRA. You're socking away that money when they're 14, 15, 16, 17 years old, and just letting that money grow. Like, man, if there's a way to build generational wealth, like that's a great one, right?
Okay. So, for sure, one more point I want to bring up about mistakes with bookworking. Previously, we talked about making sure you note raised versus purchased if you're doing your own bookwork. Touch on that a little bit.
Yeah. So, I mean, raised cattle, depending on, cow calf, or if it's like a raised cow, they go different places on the tax return, right? Like sometimes you'll get clients that they'll get a QuickBooks file and then they just dump everything into cattle sales, right? And it's like, okay, were these purchased? Were they raised? Are these calves? Like, what's the deal? Calves go on Schedule F, and so they're subject to Social Security, Medicare, so FICA taxes on top of ordinary income, where if you have raised cows, then they go on your 4797, which is a different form on the tax return, and they are not subject to Social Security, Medicare tax. And so it's important to denote the difference because it could end up costing you like 15 cents on the dollar, depending on where those get thrown on a tax return. So that's really important, especially if we have stockers to allocate, stockers or inventory, right? We buy them one year, we sell them the next year, sometimes within the same year. But if we just throw all purchased livestock to one category, we don't know if they're breeding livestock. We don't know if it's your stocker program. You know what I mean? So that's like back to the beginning where I'm like, you got to be careful that the person who's like doing your tax return truly understands ag. So you don't have someone that's like throwing steers on depreciation. You know what I mean? It's just wild to me. Like even in hearing stories of other firm owners that are like, how many times have we told staff like steers can't breed? You know what I mean? But I think that it's just something that unless you've like gotten, had your boots in the corral, I think it's, we're drawing diagrams with staff every year that's like, this is a heifer, this can be bred. Or, if you see that these heifers were spayed, they're obviously inventory, they're obviously stockers. Like we're not throwing them on depreciation and writing them off. So, yeah.
Okay, so we've talked about underutilized tools, common mistakes, but a lot of that, anytime we're talking about being more organized, not letting balls drop, etc., it comes down to sometimes having the right programs and systems in place so that we don't feel so overwhelmed, so that everything is where it needs to be come end of year bookwork, tax season, etc. So what tips or advice do you have for producers who want to clean up their own bookwork strategy, or they're not happy with how someone else is doing the bookwork and they want to take it on themselves but don't know where to start? I mean, can you just touch on that? What are some services, programs, other tips and ideas that producers can utilize in their own offices to be more organized when it's time to send stuff to their CPA?
I think the biggest thing is having a process that you can commit to, right? As you know, like I have really taken on working with Ambrook and I've gotten clients on Ambrook. Some of them I do all of it for, right? It connects to bank feeds. I'm doing all the entry for, but then I have other clients that are like doing it on their own, and they're doing it on their own because they can do it on their time, right? Like Ambrook has an app where if mom's waiting in line in school pickup line or waiting for a kid to get out of practice, she could be like allocating expenses like within her app in like little gaps of time instead of like kicking it to a pile of like to figure out later, right? I think That's the crazy thing. There's oftentimes an ad where I essentially have two separate sets of clients, right? I have some where it's like the husband does the books, and then I have probably 50% where it's like all on the wife, like 100%, like that's her realm. And that's fine. Both are totally acceptable, but I think often people get stuck wearing two hats, right? They're also trying to get the bookwork done, but they also need to be running grain cart or, helping ship calves or whatever. And so when you can like tag transactions, like that's what Ambrook calls it, tagging, is when you're like saying, okay, this was fuel expense, this was calf sales. When you can do that from anywhere, a tractor cab, a school pickup line, I think that really helps not get this overwhelming feeling of like, now I'm 3 months behind, now I'm 4 months behind, right? Like that can get to be pretty consuming, especially when you're like coming up against year end and the accountant's like, hey, we need to meet for tax strategy. And it's like, I didn't reconcile the book since February. You know what I mean? Like I just have like this giant pile. And so I think keeping it in real time helps. And I think a component of that is having a software that's user friendly. And it's user friendly, but the thing I love most about Ambrook is their customer service is bar none. Like 100%. There's been times when I'm like in the chat within the software and I get a real US based human that responds and is like, click this, it'll walk you through it. And if you get busy, whatever, and leave the computer, you'll have an email waiting for you the next morning that's like, hey, did you figure this out? Is there anything I can do to help you along? You will not find that in another software company. You know what I mean? QuickBooks was kind of the monopoly for years, and that was fine. And for a long time, they really took care of their accountants. Like we had our own priority line. We didn't have to wait on hold. And, recent years, everything kind of switched. And so now you're on hold for hours. You get routed at 3 o'clock in the afternoon overseas. The person picks up, there's roosters in the background, like because the sun's going up there, right? And so I think QuickBooks, they had a monopoly for so long, but at the end of the day, like this is one of the other banter back and forth between me and my husband, is he's like, if someone brings me a QuickBooks profit loss, I'm throwing it in the trash. Like I'm shredding it. Like no way. No way is this accurate in any way, shape, or form. Because it is like open range, cage free. It's not ag based. Ag is such a very unique industry, right? Where we could be tracking inventory, but we also are essentially like creating our own products. And so you can get QuickBooks that like has classes. You're going to pay a lot for that subscription, but you can do it. But it is like double the bookwork, and the juice is maybe not worth the squeeze because every transaction you're going to have to put it to a class, and it's hard to break down classes by percentage, right? And I think that's like one of the huge things that I applaud Ambrook on is you can teach it with their automations. Like you can say, okay, when you see Frenchman Valley Co-op, this will always be feed and supplements. You will put 70% of it to cow calf. You will put 20% of it to stocker feeder. You will put 10% of it to leased cattle, right? And it's like doing the bookkeeping for you. Like it's going per enterprise. It's going like, you know what I mean? Like to me, like it's worth that buyback in time, consistently across the board. I've never met a client involved in agriculture that says, I have all the time in the world for bookkeeping. I just truly enjoy it. You know what I mean? It's something that just gets punted because oftentimes it's very family driven, right? Like their kids are their focus, shipping calves is their focus, harvest is their focus. Like bookkeeping is low man on the totem pole, kind of as it should be. But they also need like a system that is easy. When I started like making the transition to Ambrook, after I have so many clients that were QuickBooks Online, and I said, shoot me straight, do you like QuickBooks Online? And they're like, well, I'm trying to like it. I know that that's what you work with, and we just want to work with you. And I'm like, shoot me straight, do you like it? And they're like, we hate it. It's a means to an end, right? Like every accountant needs good cash basis books to do a tax strategy, to do a tax return. And so I think we're missing part of the picture when we're only focused on what happened between January 1 and December 31, right? Like you could unknowingly be kicking a tax can down the road, right? If we're not keeping track of, okay, we have a huge set of stalkers that we're going to sell in January, right? Like there's just so much opportunity when we're like, okay, maybe we know we're going to sell these stalkers next year. We've made a killing on them. Maybe we wait and buy that equipment next year too, right? Like we have this conversation, like we need to have a tractor before calving season, but maybe we wait till next year, right? And then we're, able to income average. And so I just think that overall, just having a really big picture of what's happening is profound. And also, I mean, the Ambrook software, they keep building, right? Like they've taken accountant input so seriously. There has been like one occasion where 8 o'clock in the morning, I sent an email and I'm like, hey, this needs to not do this. I don't know how to do it, but this needs to not do it. And by 1 o'clock in the afternoon, they were showing me the beta version of their fix. Like those people see a problem and they go to work, right? Like at that ag conference I went to, accounts were mentioning Ambrook, but I think you don't have like a lot of accountants jumping on board because that's a huge percentage of their profit revenue, right? If instead of the clients shipping you their stuff, you pay staff $20, you send the client a bill for $80 an hour on that, like I think that would kind of disrupt it, right? And also like bookkeeping is busy work in the off season, so that way they have staff to prep returns in tax season. So, but I think that's one component. I think another component is the fact of learning new software. People that have power in accounting firms are beyond capacity, you know what I mean? But also, accountants have this misnomer that Ambrook says they're ag, and they are. But they also have some construction, have some, contracting, have some other things. But it's because the farmers and ranchers had a need, right? It's not off like you will often find that a farmer or a rancher, they do have other enterprises. They are doing some custom hire. They are doing some trucking. They are doing little things on the side. Or, the wife is like selling eggs or the kids are selling eggs or, whatever it is, like it is ag. But it also has those other things only because their core clients had a need for those things. You know what I mean? One thing that I think is really profound in Ambrook is how easy it is. Like you can take your categories out of QuickBooks and you can merge them with like Ambrook has a way where you can import your categories in your tagging and things like that. And you can map it. You can tell it when I sell calves, it goes on this line on the Schedule F. And an accountant could review that, right? To be like, is this set up? Did I do this correctly? And man, everyone's life will be easier, right? That tax strategy, when we can just kick out a Schedule F, we can get down to like, this is a self-employment tax, this is the ordinary income. Like, it's profound. And so, yeah. Other software companies out there, there is QuickBooks Online, and that's fine. A lot of AI bookkeeping is going to be coming down the pike. You know what I mean? It's an ever-changing world. But I do think that Ambrook has a heads up in these, like on the expense side, but also on the income side. You could send somebody an invoice from Bailey as you're leaving the field, right? You don't even have to have Wi-Fi connection for that. Like you can do things instead of, and that is like huge. If you have a line of credit, when you're getting that bill kicked out same day, instead of waiting for the weather to be bad to have to do your bookwork, like it's a game changer.
Absolutely. And I know several of my Rancher Mind members who joined from my monthly Q&As have made that switch, and they used to be fairly comfortable in QuickBooks, but they switched over to Ambrook and they just said, we love it. It's just so much easier to look at and navigate for us.
Yeah. Yeah. I think the navigation is huge. Like all the transactions go into what it's called as a ledger, but you could search for a certain name. You can also click multiple transactions. Like you can click one, hold the shift key and select multiple and then say, okay, from this time frame, allocate these, per enterprise, per, whatever you want to track, change the contact info. Like, to me, it's so user friendly. And then having that data just at the snap of your fingers, right? Like, I'll often have operators that they'll have the QuickBooks and the wife will manage QuickBooks, but then the husband has his other cost of production Excel spreadsheets where he gets home from the field and he's putting all this data in to his Excel spreadsheet. And so that could get to be a mess. You know what I mean? To have something that's like living, breathing, you can adjust it, you can see what is working, what is not. That's profound. I have one operator and you know, thought that one rental check, they kind of do multiple things with the same person. And so I thought, okay, when they're paying for this, this is for, they have like a smaller little feedlot. And so I'm like, I think we need to reevaluate this because this is like barely breaking even, right? And so we started working through the expenses. Well, it turns out it was a rent check for their grass cattle. And so I'm like, okay, makes total sense. And like to have that just beautiful, like profit loss separated by enterprise that's like, here's how the stockers did, here's how the leased cattle did, here's how the cow calf did. Like, man, it speaks for itself, right? Especially when you can look at it like year over year and time frame over time frame. And then like one other thing that we do in Ambrook is we have like for my stalker guys, we have each lot in a location. Like it's broken down by lot. And so we track it by lot. And so like Ambrook has this profit loss section where, and we use metrics, right? We tell it, lot 70 has 126 steers. So then when you go to sell it, it knows that and it prints out sheets. Well, displays sheets. We're moving past printing, but it's like breaks down that margin per head. That's incredible.
Yeah, there are definitely a lot of tools that are effective and valuable for all types of ag operations there. Now, I do want to kind of shift back towards well, we haven't really gotten off of the tax conversation a lot, but I do want to go back to maybe some more tactical stuff. Have there been any changes in codes or anything like that that producers should be aware of for the coming tax year that might have been different from previous years?
I think the biggest thing on a lot of accountants' radars right now, clients' radars, is this excess fertility deduction thing, the 180 deduction. There's more coming out on it all the time. Accountants are changing their stance on it, saying, maybe we should not be writing this off 1 year, maybe we should be amortizing it. So, but that's not like a new law. That's an old law, which they've kind of just, to be frank, twisted a bit. And then this other company decided, oh, we could make these really pretty reports on this and then sell this that, people could be taking, $1,500 an acre deduction because of excess fertility. And so I think we're starting to see people get a little more conservative on that approach. So that's really been hitting the email chain of like, how are we handling it? Stuff like that. Research and development tax credits, they expanded that to be more for ag in the OB3A. Typically, we see that with clients that have inputs of 500,000 or more is where that kind of gets to be more cost effective because you have a lot of compliance stuff with that. Like I said, the big thing is that tax rates stayed low. Like they were set that 12% was going to turn to 15%, right? Like it adds up when you start talking percentages that increase so much. One big thing, not tax wise, but a really big win in this OBBBA is FSA payments. They're no longer like it used to be that like general partnerships were the holy grail. They could have a lot of payment limitations where S corps and other LLCs only had like one limitation for the entity. Well, OB3A made it so, and there's some transition, right? It's going to take the USDA, the FSA office, some time to transition to this new way of thinking where everything kind of can act like a general partnership, where you can have an S corp that can have 4 payment limitations, and then down to 4 partners. And so that was a really big win. And so, a lot of people were gung ho to get these LLCs, but then LLCs had payment limitations of 1 instead of, however many actively farming people there were in it. You have to have the left hand, the right hand component to that. And there's other rules, but I think that was a really big win that came out of this.
All right. Well, Hannah, if there is one thing that producers take away from our conversation today, what do you want that to be?
I just am such a diehard of know your effective tax rate, know your marginal tax rate. Before you buy that thing in this year versus next year, or prepay all that feed, or decide to leave that calf check on the fridge till after year end, like I know y'all do it. You know what I mean? Just make sure when you're making those decisions, they come from a place of confidence, right? That's my big thing. Like confidently know like the decision you're making and the impact it's having, not only this year, but in years to come. And so I think that's why I'm, so big into like the enterprise accounting, because we're not just looking at one year. We're able to look at like multi-year and create multi-year strategies. And honestly, I love when clients like to do their book work and don't think of it as a chore and are actually like excited to see, okay, how is this operation doing? You know what I mean? Is like when you're dealing with ag, it's heavy in the working capital, right? You're dealing with $100,000 transactions all the time. And so like knowing with confidence, like what is making money, maybe you need to pivot, maybe it's depending on grass leases, maybe a different enterprise is better. Maybe it's better for stockers this year, or maybe something opens up and you know what I mean? I just
Mm-hmm.
think that like keeping a good pulse on not buying your way out of tax, which hurts you in the long run, right? We're seeing a lot of transition in ag where these people we thought, some land was never going to come up for sale, and now the opportunity is striking. Those that have the cash, that have the working capital to do it, are the ones that are going to get those opportunities, right? Not the ones that get stuck in this process, because when you're, buying your way out of tax, you buy this equipment, you owe money on it, you've already gotten the tax goodie out of it in the 1 year. Meanwhile, you have to make payments on that sucker. And often you're making payments as its value is going down. Like, that's just not a game that's sustainable. And so, you know, I think that's the biggest thing is know your effective tax rate. So that way you're making decisions that take that into consideration rather than just shooting from the hip. I made a lot of money. I need to buy this. You know what I mean? Especially with that Schedule J factoring in. And I don't think it's a bad idea to ask an accountant, hey, is this factoring in Schedule J? Or hey, how can I structure this where I can utilize a Schedule J? You know what I mean? If you really get on that team mentality of like, how do I be a better client? I think that and how do I understand this? You know, it's rewarding for both parties, right? Like I have clients that were well vetted into this, and they'll be like, well, I would do that, but this is a low year, isn't it? Like next year we're spiking income, and I'll be like, I just love you. Yes, you get it. Yes. So I think that there's a lot of opportunity out there. And really the farmers and ranchers have it so lucky when it comes to like what they can do with taxes, which I say that in one breath, and the other breath, it's like they do have that availability because ag is so volatile, right? And the IRS knows that. And they said, okay, instead of these like volatile highs and lows, we're just going to kind of income average you out to help you out. So, yeah, I think they're great.
Okay. Well, Hannah, I really appreciate your time today. Thank you for joining me to share all this knowledge with my listeners.
Thanks for having me. I love to help people, and I love to give them tactical things, right? I mean, figuring out your effective tax rate, that's empowering.
Okay. Well, for those of you who are out there listening, there will be a link to Ambrook in the show notes if you are interested in learning more about that. Additionally, please leave a rating or review, because that is the best way to support this podcast and other podcasts after you share it with a friend who would find this information valuable, because podcasts do still grow best by word of mouth, especially in ag, because we know ag is really good about that as well. But with that, happy ranching, folks.